The Federal Inland Revenue Service has granted a full waiver on accumulated penalties and interest of outstanding tax liability subject to payment of full principal before December 31st, 2023. The tax agency says the concession, which aligned with the Section 32 of the Federal Inland Revenue's establishment as amended, were considered in recognition of the challenges faced by many taxpayers in settling their outstanding tax obligation, and in line with the commitment of the current government to support businesses. Welcome to Business Point. I am Kike Lomo Okeri. This is where we x-ray the activities of the Nigerian economy and the government policies. Stay with us. We'll be right back. Welcome back. If you're just joining us, you're watching Business Point on Global Television. We're on Star Time Channel 276. In recognition of the challenges that many taxpayers faced in settling outstanding tax liabilities in line with the commitment of the federal government to support businesses, the federal Inland Revenue has approved the following tax concessions for taxpayers with outstanding tax liabilities in accordance with Federal Inland Revenue Act 2004 as amended, full waiver of penalties on outstanding tax liabilities, and full waiver on interest on outstanding tax liability. The chairman of the FIRS, Zach Adedeji, explained that the full penalty and the interest shall be reinstated after the expiration of one-off concession window where the outstanding undisputed liability remained fully or partially unpaid. Adedeji says the forgiveness of powder or penalty and interest was in recognition of the challenges that many taxpayers are faced in settling their outstanding tax liability. He says the concession also syncs with the commitment of President Bola Ahmed Tinubu to support businesses to flourish. Taxpayers are advised that the waiver of the interest is subject to the full settlement of outstanding principal on or before 31st of December 2023. We'll take a short break now. We'll be right back. When we come back, our guests will be joining us via Zoom. Don't go away. Welcome back. Joining me via Zoom is a tax analyst, Johnson Olugbenro. Good morning, Johnson. Good morning, Johnson. But I can't hear you.
What now? Can you hear me now?
Yeah, I can hear you. Good morning.
Good morning. Always a pleasure to be here.
You're welcome, sir. what do we need to know about the FIRS imposes penalty and interest for failure by companies, considering the new tax concession?
Okay, so you can you hear me?
Yes, I can hear you.
All right. So the thing with taxation is that they work with due date. For all categories of taxes, they have their due date. And of course, failure to do the needful as a due date also attract certain stipulated penalties, different penalties for different kind of taxes. And so what the FIRS has done now, which is also smart, they've been doing this for quite a while. They did this last year and even the year before. I think in the last 4 years, this has been done. The whole idea is to encourage taxpayers who are already in default. Because the problem with tax obligation a lot of times is you may have a tax liability in which the principal sum is under 500,000 naira. However, if you fail to make that payment as at when due, your penalties and interest can run into several millions, sometimes several times more than the actual principal itself that you were supposed to pay. And so that becomes very scary. So some taxpayers just, we've seen this lead to closure of many businesses, because if I was supposed to pay 500,000 and now interest and penalty on 500,000 is already running into several millions. So, I mean, it doesn't make sense, which is why it's always our recommendation for people to pay their taxes as at when due. However, what they're doing now is that for people who are already in default of taxes, so government is saying that come forward, we will give you full waiver of the interest and the penalties that might have accrued over time. And all you need to do is just to come and pay your principal amount as though you were paying the amount as a due date. However, of course, with a condition that you have to agree that you're going to fully settle that liability on or before 31st December. So it's a win-win for both parties. It's win-win in the sense that government is looking for more revenue, and also for the business, it's going to be some burdens off their neck, of their shoulders. So that's pretty much what this is all about.
Is it that taxpayers have been a very controversial, particularly in the light of political interference?
Sorry, I missed like half of that question. Can you go over it again?
Okay, I said that. Why is it that tax waivers have been very controversial in the, particularly in the light of political interference?
Well, maybe controversial might be an extreme word to use, but it's always been it's like the last card, because the thing is government wants revenue, and like you and I already know, revenue from non-oil sources have been the interest of government, even administration prior to the present one. And so the whole idea is every administration comes in, and don't forget that, like you read correctly in your introduction, when this administration came on board, they came with a promise of wanting to be more friendly, wanting to issue more of business-friendly policies. And so every administration has a way of trying to woo the taxpayer over and just telling, okay, we are not against you. We are here to support you. We are here to help you prosper, and so on and so forth. So pretty much every administration tries to, to play around with the issue of waivers. If you remember, during the prior administration, we had what we call VATE, that's Voluntary Asset and Income Distribution Scheme. I remember vividly then it was issued through executive order, then by the former Vice President, Yemi Osinbajo. So every administration tries to do it every now and then. The whole idea is they also kind of understand that the state of economy and the challenges that the average business owners have to go through. So this is just like their own way of saying, okay, we understand if the interest and the penalties are the issues, okay, come forward and pay the principal, and let us just close the deal.
All right, sir. In what way? All right, sir. In what way are tax waivers a disadvantage to the country?
Well, maybe not. The obvious thing, of course, is less revenue, because I mean, you could have people. I personally know people who are in current default their tax obligations, that the penalties and interest have run into several millions. So for them, it's a huge relief that, okay, so we can just pay the principal and then we are done. But then if you look at it, what is the point of counting your egg before they are hatched? So what is the point of counting paper money? So on paper, which is what FIRS has also realized in recent times. So you could say that, okay, we have this amount of liability that we are expecting from taxpayers who are in default. So let's say a particular trillion. But how many of that, how much percentage of that trillion can you realistically recover? Because at the end of the day, if the people don't have the money, they don't have it. You know, you can shut down their companies, you can lock them up and all of that. But at the end of the day, if they don't have the money, they don't have the money. So rather than completely killing businesses, and, you know, because when the business dies, the chance of you even getting zero, getting one cover from them is over. So rather than you counting your money on paper, the whole idea is, if we relieve people of the burden, and then what we can receive today, so between now and the end of the year, so at the end of the day, I don't think it's going to be a disadvantage, as it were. Theoretically speaking, it will look like some revenue loss to the government, but it's really no revenue loss in the actual sense, because we are just counting the money on paper. People may not have that money, companies and businesses may not actually have the money to pay. So it's better for you to just ask them to pay the principal, which is more convenient for them. And don't forget that one of the tenets of taxation is also that it must be convenient. It must be convenient. When you see that it's not convenient for these people to pay, let us just get what we can what we can realistically recover today, what we can use, you know, because when you collect it today, you can almost immediately plow it back into the economy, as against you just counting your money on paper. So that is what the government is trying to achieve, and I think it's a smart move.
All right, sir. Could you please shed more light on withholding tax for companies?
Okay, so the concept of withholding tax, so for every transaction, there are always two sides of the divide. So you have a transaction between a customer and a vendor. Okay, so the vendor has rendered certain transactions or services for his customer. So when the customer is paying the vendor, the customer is empowered under the laws that govern withholding taxes to withhold certain amount. So for instance, let me use a very common example. For rent, for instance, you are empowered. The tenant is empowered. Who is the customer to the landlord in this case? The customer is empowered to withhold 10% of the rent amount. So if the rent is 1 million, for instance, the customer withhold 100,000 and pays the landlord in cash the 900,000, while the remaining the remaining 100,000 is now paid still to the landlord, or rather than paying the money directly to the landlord, you are now asking the landlord to supply you with his tax ID and then the remaining 10% is now remitted on the behalf of landlord to his revenue authority. So if it is a limited liability company, that will go to Federal Inland Revenue. If it is individual and unincorporated businesses, it will go to the State Board of Inland Revenue. Now, why is that? The whole idea is this. The whole idea is that government wants to encourage honest disclosures. For instance, immediately that 100,000 is remitted into the landlord's account, government already has an idea that the landlord has received rent of 1 million. So by the time you are filing your own annual return at the end of the year, you cannot go to government and say, well, this year was really bad, we didn't make any money. They will tell you, well, we have you on record that you received 1 million from your tenant at house number XYZ in Ikorodu. And so that way you can no longer hide your revenue, because we have issues with taxpayers not making honest disclosure. So that will force you to make that disclosure. It is also like an advance payment of your company income tax or of your income taxes. So that money, even though you are not paying it to the landlord in cash, it is actually still useful for the landlord. So the landlord also, by the time he is filing his annual returns at the end of the year, the landlord will also say that, okay, my total tax obligation for the year is 150,000, but one of my good tenants has also remitted 100,000 on my behalf. So therefore, I have a balance of 50,000 to pay you. So in a way, it is also of benefit to the landlord, because it is like an advance payment of his tax. The same thing applies to companies and all of that. And the law is that if the tenant refuses, for instance, to deduct that amount, he will be the one to pay it to government. If he fails to withhold it, he will be the one to pay it to the government when the tax authorities come to act on that money, or if they have interest in that transaction. And in most cases, you may even pay that withholding tax with interest and with penalties. So basically, that is the way it works. It is like an advance payment. A lot of people confuse it with whether it is another category of taxes. It is really not in the real sense of it. It is just like an advance payment of your income taxes. And when you pay it like that, it becomes a credit. It becomes a tax credit to the person from whom that sum is being deducted. So that's pretty much how the withholding taxes work. But there are qualifying transactions. We call them qualifying transactions that stipulate, so they all stipulate that for certain categories of qualifying transactions, certain percentage applies. For instance, I did mention rent earlier, and the applicable rate is 10%. There are some other transactions like consultancies and all of that, in which the applicable rate is 5%. And it also depends on who you are dealing with, whether you are dealing with a body that is incorporated under the law, whether they are limited liability companies or public liability companies, or whether they are unincorporated companies. So, but different rate applies depending on the transaction in question.
All right, sir, before you go, sir, how has the government policies helped galvanize the tax drive in Nigeria?
So when you say government policy, are you referring to the current administration, or you're referring to...
Yes, I'm referring to the current administration.
Different policies of government. Okay, so like I said the last time I was on your show, it's still a bit early. I know this administration came in around April. It's still a bit early, but rather than just assuming, what we need to work with is to look at the numbers, because data does not lie. So let's look at the numbers and the economic indicators, what they were in May and what they are now. If you look at it, if you check the indicators, you will realize that not a lot has changed, to be honest. We've had a few gains here and there, but the truth is not a lot has changed. And that's only the most objective way to appraise the policies. However, we continue to believe that the policies are good thinking and they are in the right direction. We are all eagerly and anxiously waiting for the Committee on Tax Reform that was set up by the President, which is being headed by Mr. Taiwo Oyedele. It is like the last hope of stakeholders. Everybody is watching keenly to see how these policies will play out. And I know I have first-hand information. I know they are working day and night. I know even over the weekend, they had a very long and elongated session where they are under serious pressure to close up on their reports and then move on into the implementation phase. So far so good. The policy seems to be in the right direction. However, in terms of the numbers, not a lot has changed. I know we have had some temporary gains in FX. FX came down a bit, but it's still we are still not where we want to be. But I know that in terms of FX, we've made some gains here and there. But maybe at the end of the year, when we have more reliable data, we can now look at it and say, okay, from May 2023 to December 2023, let us look at the numbers and let us see how things have improved. But to be honest, not a lot has changed. Not a lot has changed. In terms of our data, not a lot has changed.
Joining us, Johnson Olugbenro, tax analyst. All right, moving on, this is where we draw the curtain on today's episode on Business Point. Till I come your way next time, I am Kike Lomo Okeri. Good morning.